The US dollar surges against the euro and the yen after political turmoil in France and Japan. Gold dips back below 4,000 US dollars an ounce. New Zealand card spending shows signs of life. And the Philippine Central Bank unexpectedly cuts rates. That's coming up on our 5 Things in 5 Minutes on Friday, October the 10th. And then in our deep dive interview, ANZ economist Vicky Xiao looks at how China's economy is set to perform to the end of the year.
Overall, we still think China's 5% GDP goal can be achieved.
But first, in 5 and 5 with ANZ, the US dollar rose 0.6% against the euro and another 0.2% against the yen overnight after changes of political leadership in France and Japan that are worsening worries about fiscal deficits and more bond issuance. Here's ANZ economist in London, Henry Russell.
The moves in the US dollar came despite positive developments today, with a new Prime Minister expected to be appointed on Friday evening in France and renewed optimism a budget can be delivered by the end of this year, breaking the recent deadlock. Meanwhile, in Japan, the likely next Prime Minister, Takaichi, made comments reassuring the market that she had no intention of triggering an excessively weak yen, though those comments failed to see a meaningful change in fortunes for the yen, which remains under selling pressure against the dollar and is heading towards levels where the Bank of Japan has previously intervened to defend the currency.
As of 4 a.m. Sydney-Melbourne time, the S&P 500 and the Nasdaq were down 0.5%. The US 10-year Treasury yield rose 1.3 basis points to 4.148%. Gold fell 2.1% to $3,986 US an ounce. West Texas oil futures also down 1.6% to $61.55 US a barrel. The US dollar index rose 0.5%. That meant the Aussie dollar fell 0.5% to 65.50 US cents, and the Kiwi fell even more, 0.8% to 57.43 US cents. Number 2, the Philippines Central Bank unexpectedly cut its main policy interest rate last night by 25 basis points to 4.75%. Economists and markets had expected a hold, says ANZ Asia economist Arindam Chakraborty.
The central bank cited mounting concerns over the growth outlook, pointing to infrastructure-related corruption and deteriorating business sentiment as key drags on investment activity. Both public and private sector investments are expected to slow, while external headwinds like soft global demand and trade uncertainty are compounding the risks. With inflation projected to remain subdued, the BSP signaled room for further easing. We now expect 2 more 25 basis point cuts, bringing the terminal rate to 4.25% by early next year.
Number 3, spending with ANZ cards in New Zealand rose 0.4% in September to be up 3.4% from a year ago. ANZ New Zealand chief economist Sharon Zollner says it's encouraging that the rise was broad-based.
So the things that were really negative, like apparel, they're almost back to square. In fact, that's the only category of spending that's still negative. Some of the stuff is probably mostly inflation if you look at the likes of insurance or supermarket spending. But other things like hospitality, you can now see it on the chart, in a chart of contributions. It was invisible for a long time, but it's, that spending is definitely starting to get moving.
Number 4, Sharon says it's still tough out there for some households though.
So clearly some households are really feeling the cost of living and don't actually have a lot of spare cash to spend. That's evident in our card spending pack, for example, and the fact that spending at second-hand stores is very high. So clearly a lot of households are watching every penny. But where we are seeing more of a pickup is perhaps more in the high-end categories. So in the apparel group, for example, it's actually the jewellery stores and the tailors who are seeing the sharpest increases.
Number 5, Japan released current account and trade data for August this week, showing the current account surplus fell 5%, putting pressure on the yen. Meanwhile, goods exports were down 0.4%. ANZ FX analyst Felix Ryan says export values have fallen in recent months.
That's really been a consequence of reductions in exports of cars, which again is a function of the impact of US tariffs on Japan as well. So we already are seeing that effective tariffs and the tariff risks flow through onto Japanese data. Certainly the weaker exports there is a bit of a headwind for Japanese growth, and again something that will add caution for the Bank of Japan at the margins when thinking about monetary policy from here as well.
Felix Ryan there. Now, in our deep dive interview, my colleague Alex Tarrant talks to ANZ economist Vicky Xiao about how China's economy is performing through to the end of the year.
Yeah, in Q3, we just put our forecast that we are seeing the Q3 GDP to slow to 4.8% YOY and 0.8% quarter-on-quarter. Both numbers are slower than Q1 and Q2, which reflects the impact of anti-involution campaign. The main drag for this lower than prior GDP number came from the construction sector, which we see the construction sector's GDP will contract by 2%, which is a reflection of ongoing weakness in the real estate and infrastructure activity.
You note in the note that fixed asset investment is projected to be quite weak. What's behind that?
Just on the number first, by August, the fixed asset investment in China only grew by 0.7%, which is the weakest since COVID. And then in September, we project that this number will only grow 0.2%. The property market that continue to be the drag for the fixed asset investment, and also the anti-involution campaign now in China kind of disencourage both the public sector and the private sector to invest because they don't know what's going to happen. And especially in the overcapacity industry such as steel and building material, the government try to control the capacity growth, which in a sense limit the potential investment in those sectors.
What do you think is going to happen to prices across the Chinese economy in the next few months? We've had obviously that weakness in producer prices in particular, this throughout the whole year. What's going to happen for the rest of the year?
In Q3, we've observed that the price is bouncing back. In September, we think the PPI will rebound to negative 2.2%, and then CPI also will rebound from the prior low. With the new restrictions on the capacity growth, we think price recovery is expected to accelerate in key sectors such as steel and construction. And we think in Q4, the price will continue bounce back.
Now, obviously, we've had the trade war and the US tariffs impacting China. How are China's exports holding up? Or how have they held up in recent months? And what do you see happening for the rest of the year?
In September, we forecast that China's export will grow strongly at 6.6%. Looking at the export number throughout the region, Taiwan, South Korea, and Vietnam all recorded a very strong export number in September. This means China's export will benefit from a semiconductor and tech supercycle. Additionally, new smartphone release, including the US brand and China brand, those will reinforce the tech-driven export strengths for China.
Now, everyone's been on the lookout in China for a consumer-led recovery. You've put a note in your insight about the automobile sales in China and how they're under pressure. Talk us through that.
The vehicle sale in September is quite underwhelming, only grow by 2%. And then the recent observation we made during China's Golden Week, the car sales seems not very satisfactory. This was kind of driven by scale back or removal of a lot of vehicle subsidies across different provinces and cities. And also on the pricing front, because of the anti-involution campaign, a lot of car brands, they were monitored by the MIIT, which encouraged the price competition among the car sellers. So both factors weighing on the car sales.
And just finally, are you still expecting China can meet that 5% GDP target this year?
In Q1 and Q3, we've seen China's GDP growth at 5.4 and 5.2. Despite this month could be disappointing at 4.8, but overall the average is still sit about 5%. And then we think Chinese policymaker will keep their option open. And then if they see further weakness in the data set, and then they probably will accelerate the monetary support by cutting the interest rate by 10 basis points. Overall, we're still seeing China's 5% GDP goal can be achieved.
Vicky, Xiao, Zhou there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Friday, October the 10th. Catch you next week as we look ahead to the Reserve Bank of Australia's meeting minutes and September US jobs market data, maybe. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.